What's going on, everybody? Welcome back to Iron Digital. I'm your host D Wills, and in today's video I'm going to be going over what's going on in the crypto world. So let's get into this video real quick. In today's news, we got Bank of America approves Bitcoin futures trading for some clients' sources. Alright, Bank of America, the second largest bank in the US, has approved the trading of Bitcoin futures for some clients, according to two people with knowledge of the matter who spoke on condition of anonymity. Like most institutions, the bank has been conservative in its approach to the crypto sector, but due to the large amount of margin required to trade the futures, it is now allowing some clients to access the crypto market. One of the sources said some clients are setting up to trade Bitcoin futures, which are cash settled, and one or two may have already gone live, the other sources said. A number of investment banks are reportedly allowing clients to invest in crypto products. In March, Goldman Sachs confirmed plans to relaunch its cryptocurrency trading desk after a 3-year hiatus. And in May, the investment bank started buying and selling Bitcoin futures and block trades through Chicago Mercantile Exchange Group, using Cumberland DRW as its trading partner. Bank of America will also be using CME futures, according to one of the sources. Bank of America declined to comment. Early this month, it emerged that the Charlotte, North Carolina-based bank had created a team dedicated to researching cryptocurrencies and related technologies. In 2018, Bank of America blocked financial advisors and clients from trading in Bitcoin-related investments, but that policy has now changed. What are my thoughts on this? To be honest with you, I really don't care. I'm bringing this to you guys to be able to see what's going on, but I don't necessarily think it is a good thing for the futures, for Bank of America to be offering futures, because in my opinion, I don't think the futures is really doing the crypto markets or doing Bitcoin it's not really doing anything good for the space, because the only thing the futures market does is it just enhances speculation and is good for hedging. So if you do buy your actual Bitcoin outright, then you can sell shorts, futures. This way you can hedge your position. So it just promotes more speculation inside of the industry. And I understand that markets are speculative. I mean, that's just what they are. That is what it is. But for what we're trying to do with Bitcoin and the crypto markets in general, I don't think having access to more futures is necessarily a good thing. If you was around in 2017, you'll remember that when the futures market opened, I forget who adopted it first, but when they started accepting Bitcoin futures, the price just tanked. It just tanked drastically. And the narrative had been, okay, when futures markets opens up, then that's when Bitcoin is going to climb to $30,000, $40,000, $50,000. And it just tanked as soon as Bitcoin was allowed to be traded through the futures market. So again, I don't really care about this. It's not necessarily a good thing to me. It's the wild, wild west. In other news, we have Ethereum could settle $8 trillion in transactions this year. Here's what's behind the surge. New numbers from cryptocurrency data firm Bazaar show that Ethereum network settled $2.5 trillion in transactions in the second quarter of 2021. Bazaar senior research analyst Ryan Watkins says the numbers suggest the blockchain is now on track to hit 8 trillion in transactions by the end of the year. In Q2 2021, Ethereum settled 2.5 trillion in transactions. That represents plus 65% quarter over quarter, or 1490 year over year, and puts Ethereum on pace to settle 8 trillion in 2021. So as if y'all looking at the chart, you can see that about half of that was in stable coins. So half was just in stable coins that's on Ethereum. Nice. Boskin says the surge, is primarily due to a boom in decentralized finance and stable coins. Between April and June, decentralized exchange volumes reached $405 billion, making an increase of 117x year over year and an 83% increase from the first quarter numbers. Outstanding loans in lending platforms also increased by 44% over the quarter, according to Bazaar's Q2 2021 DeFi review. Bazaar adds that the rollout of Layer 2 scaling solutions on Ethereum will immensely scale DeFi sectors. The most anticipated launches of these solutions are optimistic rollups, which allow thousands of transactions to be bundled into a single roll-up block now. My thoughts on it. Well, I mean, let's compare. You look at what they did the first quarter. They did 1.5 trillion. We know that PayPal all of last year, all their transactions together did like 995 billion. I don't even think they did. They was like almost at the tip of 1 trillion. And we seen that in the first quarter, Ethereum did 1.5 trillion. In their first quarter, they did more than PayPal did all of last year combined. Now, there were obviously other factors that were in place with last year. You know, you're talking about C19 and everything like that. But still, there was a lot of people online buying things. So you make that comparison, you can see that 1.5 trillion just from Q1, and then we jumped to 2.5 trillion in Q2, which is massive. It really just goes to show you where this space is going to go in the future. There still are a lot of leaks as far as it being a lot of degenerative gambling and everything involved. But if you're looking at the numbers don't lie. I mean, 2.5 trillion in Q2, that's extremely attractive. I mean, look at that trajectory. You know, being able to settle 8 trillion in transactions in 1 year. I mean, that's massive. And you know, the thing is, investors and institutions, they want that yield that's going to be in DeFi. They want that yield from the stable coins. So if you go into crypto lending rates, and you can see that with DAI or USDC, which are on top of Ethereum, you're looking at that. Fulcrum is willing to offer you 6.5%, USDC 4.8%. And BlockFi, well, I don't, just so that you know, I'm not a fan of BlockFi, you know, just because it's centralized and they've already proven that they can't handle what they got going on over there with the 750 Bitcoin being given out. But even them, they're paying 8.5% on DAI. USDC, they're paying 7.5%. And you're not going to get that kind of yield through the traditional banking system. You're just not. You know, even if you lock it up in a CD, it'll give you what? Maybe 1%? Maybe for a 12 or 24 month. That's nothing. You're still losing money. So this becomes extremely attractive to a lot of investors and different institutions, and they definitely want to get involved. They see the writing on the wall. They see that DeFi is here to stay, and it's only going to continue to get better and better. So good news for Ethereum. That's another W for Ethereum. I'm telling you, Ethereum killing the game. It really is. In some more ETH news, we have Brazil green lights first Ethereum ETF in Latin America. Okay, here we go with this again. The Brazilian Securities Commission just approved an exchange-traded fund that tracks the performance of Ethereum. Blockchain investment firm QR Capital, the holding company of QR Asset Management, says the Ethereum ETF will be traded on the country's stock exchange B3 with the ticker QETH11. All right, let's see what he has to say. QETH11 follows the same Ethereum index used by the CME group, the CME CF Ether reference rate. For this, the ETF buys physical Ethereum and carries out custody with the transparency and security for you. Your new ETF will use the institutional custody provided by Gemini, a crypto exchange owned by Cameron and Tyler Winklevoss. Expanding the horizon of diversification, QETH11 becomes a simple, safe, and regulated option for any investor to gain direct exposure to Ethereum through their preferred brokerage without worrying about registrations in exchanges, wallets, or private keys. Okay, cool. Well, this news is pretty good. I mean, it's more exposure for ETH, so it's like legitimizing ETH and making it look like a legitimate contender inside of the system, which is obviously a good thing. And you know that ETF has to buy the actual Ethereum in order to be able to offer it. I'm still just the kind of guy where I'm just like, just buy the ETH. Why do you have to go through all these different exchanges? But I do get certain aspects of it. I get why people want to do it sometimes, but I would just prefer to buy my Ethereum through an exchange, take it all, put it inside of a cold wallet, and maintain my own custody, because I'm still one of those guys that are under the I still believe in decentralization, even though I don't think that the world will be decentralized at this point. Just looking at what the current crypto market is, I don't think that the world will be decentralized as of right now until we move further ahead. So yes, it's a good thing for it should impact the Ethereum in a positive way, because like I said, the ETF has to buy the actual Ethereum and then people buy into the ETF. So that's a good thing. But if you can buy Ethereum yourself, buy it yourself and just put it in a cold wallet, and that's what I think you should do. Not financial advice, but that's what I think you should do. Anyway, in other news, we have Binance stops stock token sales effective immediately. The crypto exchange gave no indication as to the reason, stating only that it would be shifting its commercial focus to other product offerings. That's very wise, Binance. Binance's highly popular stock tokens, a relatively recent offer, are being wound down immediately. And in an announcement published on Friday, the exchange announced that effective immediately, stock tokens are unavailable for purchase on Binance.com as of October 14, 2021. The exchange will no longer support stock tokens at all. Existing stock token holders will have some time to adjust. Users who currently hold stock tokens may sell or hold them over the next 90 days. Users will no longer be able to manually sell to close their positions after October 14, 2021. Therefore, all stock token positions on Binance.com will be closed. While unconfirmed as of the time of writing, Walter Bloomberg has claimed in a tweet that Hong Kong's SFC says no entity in the Binance Group is licensed or registered to conduct regulated activity in Hong Kong. If true, the development would confirm that mounting regulatory pressure on the world's largest cryptocurrency platform is continuing to hit its operations hard. Fundamentally, the following applies. If tokens are transferable, can be traded at a crypto exchange, and are equipped with economic entitlements like dividends or cash settlements, they represent securities and are subject to the obligation to publish a prospectus. Okay, I'll stop it right there. My thoughts: Binance is under attack right now. I think that if you are using Binance, you probably should try to get another alternative, get a different option, try to get as far away from Binance as you can, because there's just a lot of things that's happening behind the scenes, and we don't know exactly what's going on. And the fact that we don't know what's going on is a problem. So we can't there's no transparency there. We can't legitimize what's going on behind the scenes. Now, we do know that they're getting attacked. A lot of different banks are not allowing you to actually put fiat into Binance or take it out. So they're not accepting it, and they're not allowing you to send it to Binance. So at this point, at the end of the day, look, we still have to use banks in order to get the fiat into the system. The crypto market is only 12 years old. We're not at the point yet where we can just operate completely without banks, because as long as we have fiat currency, we have to continue to use banks in order to onboard that fiat into the actual exchanges. And so you kind of got to be careful with what you're doing. I mean, I for one thought that the whole stock tokens that they were doing was a bad idea. And I mean, a lot of people, I'm assuming a good amount of people would have thought that was a bad idea, because though that stock tokens, that has regulatory oversight, so you trying to do that is a very, it doesn't make sense why you're trying to do that. There's regulations behind it, especially with those being securities. And so doing that just makes you a target. And that's why they're getting attacked from left to right. Nobody knows where the headquarters is or anything like that. Makes it very easy for the powers that be to attack them. At the end of the day, you still have to go through them. We're still not completely decentralized to the point where we can take our fiat and not have to go through a bank in order to get it to an exchange to trade crypto. We're just not there yet. So you have to be careful with the things that you do. And that was very sloppy of them in the first place to be offering that. They're trying to do too much instead of just focusing on a certain select things and being careful with onboarding people into this space properly. Because the only thing they're going to do is they're going to essentially just kill and ruin their own empire by offering that stuff in the first place. I would get rid of Binance. I would not use them. I would look at what alternative exchanges exist. And just remember, Mt. Gox. If you don't know anything about Mt. Gox, look it up. I would not leave any crypto, and I mean no crypto, on Binance at all. I would be very, very careful with using it. In fact, I wouldn't use it at all, as I've stated before. But anyway, that's all the news that I have for you today. I hope you enjoyed the video. Subscribe to the channel, like the video. I'll talk to you guys soon. Take it easy. Peace.